It has now been over 5 years that I've maintained my Wealthsimple Invest robo trading account for my RRSP, which I opened back in 2018. Pretty crazy how time flies. Like, look at me, I look like a kid in this video. My channel actually got a lot of momentum though and boost from my series of videos featuring Wealthsimple Invest and Wealthsimple Trade over the years, as they're some of the most viewed videos on my channel and might even be how you discovered my content. If that's the case, comment 2018 down below in the video's comments. But now, after years of investment returns through hot markets, down markets, and recovering markets following the pandemic, I think it's time that once and for all I give a final verdict on whether or not this investment has been worth it, and if I'll be maintaining my investment within Wealthsimple Invest or moving it elsewhere. By the way, Wealthsimple Invest is a platform that creates a portfolio of exchange traded funds on your behalf with an asset allocation that's based on your investor profile, so age, risk tolerance, and a couple of other factors that come into play. And for me, as someone who's still in their 20s, I've had my account on risk level 10, the highest available for most of the past 5 years. And this means a 90% allocation towards equity positions over fixed income positions. So in theory, this means that the growth of my account should be more tightly correlated with the movements of the equity market, specifically the US and Canadian stock markets, as well as some international markets, which respectively are up 80% over the past 5 years for the S&P 500. But has this been reflected over into the Wealthsimple portfolio? Well, let's find out. So like I mentioned, I've had this account open since 2018, and we can see from this chart showcasing the contributions and movements over the years. And as it stands right now, the portfolio is sitting at a value of right around $16,500 at the time of recording this video, which happens to be up right around 15.7%. And as I mentioned earlier, we can see here that the portfolio's asset allocation sits at 90% equity and 10% fixed income, as well as gold, and a risk level of 10. In fact, let's click on that and gain some further insight into how that 90% is split up. So as we can see here, 30.8% is held in the VTI ETF covering US equities, 22.4% is held in the IEFA ETF, which covers international equities, 15.4% is EEMV covering emerging markets, 11.9% in GLOV covering global equities, and then 11.1% in QCN covering Canadian equities, being the smallest position of all actually. So in this 90% split, you're getting exposure to equities from all across the globe at various allocations, and then we're looking at 2.5% in gold and 5.5% in BMO's long federal bond index ETF, which has a negative 28% return. And we can also see that the US equities, to no surprise, is what's contributed to the largest gains in this portfolio. Now, you don't need to know much about investing to realize that a 15% return over the past 5 years at a 90% allocation towards equities is pretty abysmal, even considering the COVID crash. In fact, this should have been a further opportunity for the platform to average down and get in at a better price point. And of course, the 0.5% annual management fee is baked into this return. And you know, I've kept this account open for several years now because I've wanted to see how it plays out and continue documenting it on my channel. But considering the returns that it's produced in light of the current market, I simply can't justify keeping this capital in a managed investment account anymore, as it's just holding my positions in ETFs anyways that I can easily buy on my own and cut out the ones that I'm less interested in, like GLOV, EEMV, and QCN. What's more is that even for the fixed income aspect of the portfolio, that's down 28%, which is brutal. I could just hold that cash in a high interest savings ETF like cash that yields 5.5%. So there's really no justification for this in the current market. And to put things into perspective on a shorter time frame to make the comparison a little more accurate, since November of 2022, when the portfolio went back into the black, as we can see here, it's since appreciated by 15.7%. That same amount of money simply put into even the S&P 500 would be up 23.4%, almost 8% higher, which is about $1,000 more considering the balance of this portfolio. Now, of course, you would wouldn't only want to invest in the S&P 500, but the point is that in the past year, returns have been quite bleak for this portfolio, and over the past 5 years, they're even worse, considering dividend reinvestment and the opportunity to have averaged down during 2022, which didn't happen even considering the contribution that I made. I can't even imagine what returns are looking like right now if the portfolio was on a risk level of say 7 and under, where the US equities weren't there to save the day as they usually do. So yeah, overall nothing all too impressive from the robo trading platform, especially for anyone who's more involved with their investments, such as myself anyways. But I would say that if you're someone who's totally hands off and wants this to be 100% passive, you know, this is still a better option than not investing at all. But I just think that buying a handful of ETFs yourself is almost just as passive. It really is. And you're saving on the 0.5% annual fee, plus have more control over your investments. So with that said, what am I doing with this account? Well, I'm going to be transferring it over to a self-directed RRSP investment account so that I can purchase ETFs on my own, mainly the S&P 500, some NASDAQ 100, and a bit of Canadian exposure as well. And then also some high interest savings ETFs for some steady interest income. If you're interested in learning more about what those are and how they work, I'd recommend you check out the video that I've made on the channel covering them. And by the way, I'll most likely be doing this transfer over to Moomoo, which is a new investment platform available in Canada that now offers TFSAs and RRSPs, extremely low trading fees, a ton of stock data for conducting your stock research, and many more features, along with crazy sign-up bonuses up to $1,550 when you sign up and fund your account, which I've never seen sign-up bonuses so impressive in the Canadian investment landscape. So if you're looking for a new investment platform or just even want to get the sign-up bonus, don't sleep on this opportunity. Check out the link down below in this video's description and open up a Moomoo account. And with that said, since I'm closing down this account over on Wealthsimple Invest, I guess this marks the end of an era really for the channel. I won't be making any more updates on Wealthsimple Invest, of course. It's been a ride, but didn't work out as planned, unfortunately. Additionally, if you want to learn more about investing in the stock market on your own, check out my course. It has nearly 2,000 students as of right now, and it's completely free for you to watch over on Skillshare. All you have to do is make an account for a month. You can check out all the content, over 7 hours of content, completely for free. So thanks a lot for watching today's video. If you enjoyed it, please drop a like. It really helps the channel out, and consider subscribing to be updated on new and upcoming investing videos that I make on this channel. Thanks a lot for watching, and with that said, I'll see you in the next one.